and at night. All right, good morning, everyone. Sorry for the late start. Let's keep going. Okay, yesterday's session in the States was a bit of a drift down for the most part. We had the S&P, NASDAQ, and the Dow all finished down on the day, but there was nothing too convincing there. I think everybody was, sort of waiting for the Apple earnings, which, it's such a big part of the index now. I think a lot of people were very concerned with it. We're very, there was a lot of optimism going into the number, but I think a lot of people were just kind of waiting for it because it makes up such a big part of, the basket and such a big holding across all the spectrums in the States. One of the things I think was really important that happened yesterday was the move in the biotech sector. We were down, the biotech ETF was down over 4%. Now, if you guys have been paying attention in the States, pretty much this entire rally over the past few years has been led by the biotech space. There's a lot of people calling for a bubble there in the biotech sector. There's some insane valuations going on there. Look, there's been a lot of M&A there recently as well, so I think somewhat justified for those significant premiums. But the bottom line is, as a leader, watching it pull back 4% yesterday makes it a little bit more significant, and I think we need to see if there's any more follow-through. Even one of the companies, wasn't one of the bigger companies, but one of the companies came out yesterday and said that they had actually misreported earnings, got hit about 20%. So there's definitely something to pay attention to today. Is going to be to see if we have any follow-through in the biotech space. We did have Dallas Fed Manufacturing as well, which came in slightly below expectations. One of the outliers yesterday to me was the move that we saw in precious metals, gold, platinum, silver, really all ran significantly hard. We did have the dollar that weakened across the board. I think a little bit of it was driven by that. I'm not really sure why the dollar was weakening as much as it did. We actually saw 10-year treasuries push a little bit higher yesterday, or the yields push a little bit higher. So treasuries sold off during that move. So like I said, I'm not 100% sure why the dollar saw a net weakening on the day, but it is what it is. And we saw precious metals really start to rally hard on the back of it. If we move into the Asian session, a bit of mixed action. We have the Nikkei and the Shanghai up, Hang Seng, Kospi, and Australia down. The Australian market, we had some of the miners that actually opened up in this morning's session. I think most all those miners finished down on the session, so that's important to take note of. Other than that, nothing really, I think, to speak of out of Japan. All right, moving on to the chart of interest today, the change in first quarter 2015 earnings and revenue growth. And I think what's significant is the way that we continue to see the margins expand. We've seen this going on for a long time. That hasn't changed at all. You can see earnings growth outpacing margin growth. Revenue growth to even more of an extent as of late, and it looks like it's going to continue to stretch its legs here. So everybody keeps saying, well, we're going to have to start seeing revenue growth. We can't continue to see earnings growth forever, and that can't be how we get the market higher. But the market continues to go higher because they do continue to get more margin out of product. They do continue to stretch the legs on earnings without stretching revenue. All right, so corporate action, nothing to speak of today. Market data, we've got Japanese retail sales that were slightly less. UK GDP coming out today at 10:30. Watch that one. We could see a nice move in the rand around then for you guys that are playing the dual listings. And then we've got consumer confidence and the Richmond Fed Manufacturing Index at 4. Okay, let's get into some maps here. I don't have anything spectacular to show to you guys today. I'm going to go ahead and just lead in with that. But what I think was important on Friday is the move in all the mining stocks across the board. We really saw, Thursday. Thursday and Friday, we saw a real bump up in mining stocks. And you see that across the board, even the real dogs of the index had some of the biggest runs. Kumba up 11% on Friday, I believe. Here's ARI. You can see there's definitely a level here at around 110 in ARI. We broke out of a little descending triangle off of the lows. Definitely looks like we're going to test 110. If it gets north of 110, I think it can keep going. We'll look at Kumba as well. Kumba, same sort of thing. I mean, Kumba I don't think there's any real major resistance for a while. You can definitely say maybe that there's some sort of resistance where we made that previous little low and then rebroke from that. That's at 161, which is basically right where we closed. If we get above that, this is the level that I'm going to look for. It's going to be right up here, all the way as high as 215 bucks. Potentially, the first thing I might have a look for is 180. 180, and then if it gets through that, maybe even 215. Remember, and I think this is really, really important, that the bounce in those kind of moves is not that big in the scale of things. I mean, we're looking at a one-year chart here, but let's go back to a two-year chart. I mean, 520 bucks 2 years ago. We were at 125 2 weeks ago. So, these kind of moves, this kind of bounce here is not unheard of. It's not something that is, that is out of the question. In fact, I think, if Friday showed you anything, that was that there are huge amounts of shorts out there. Any stock that's moving 11% with no news, no earnings, anything like that is usually getting caught in a short squeeze like we saw. So just keep an eye out for that. Sasol we'll have a look at as well. Yeah, I think you got to be careful on this one. This one closed in the States last night around 478. And you can see here that 480 was the major level. We talked about this the other day. We made a little flag down to fill this gap at 460. We pointed that out as well. We literally stopped right at 460, and we really made a reversal, nice reversal to the upside. We've gotten above 480 on the close. So watch it today. I mean, to me, the closes are everything, because you can open up this morning and trade at 481, 482, that sort of thing. But if it doesn't prove itself, it doesn't hold there, that's, then, and we close below 480, then it just looks like a failed move. So watch this level very, very closely. I think 480 is massive. And if we don't stay above 480, then we could turn down. But like I said, if we're holding here at 480, I think there could be a significant move to the upside. We're at least going to get the gap fill here, probably to 500, 502, 503, wherever that level is, and potentially more. I mean, the height of this formation here would definitely be more. All right, and the last one we'll look at, just throw out one in the retail space. We'll look at Foschini. The reason why I like this one is it's such a clean pattern. We had a really clean breakout that happened here. 180 is incredibly well defined. We only got to about 181, I think, on Friday, but we're going to look for a move to get down to 180. We might have to test for a day or two. If we hold at 180, then I think that might not be a bad place to have a nibble, just because the level is so important here on this chart. That's it for today, guys. Good luck out there.